Thank you. I don't know how I follow that as an introduction, but I'll do my very best. So we've got a lot to unpack in the next half hour or so. So before we go any further, though, if everyone could very quickly just give me 30 seconds to introduce yourselves and the project that you're with, starting with you, Stanley.
All right, so my name is Stani. I'm from a project, DeFi project called Aave. So Aave is basically a money market protocol where you can deposit different kinds of assets and earn interest. So basically, mainly the deposited assets are stable coins such as DAI, USDC, and True USD, and basically others are borrowing from that protocol. And what's interesting is that in Aave protocol, you can also take flash loans, which means that you can borrow without a collateral for one Ethereum transaction. It's kind of interesting hack related to the atomicity of Ethereum. We started on January, and now the protocol has over 100 million market size, including deposits and the borrowing volume. So it has been a pretty interesting launch.
Cool, thanks, Danny. And Loy, if you could take it next.
Hey guys, this is Loy from Kyber. I'm the CEO and co-founder. At Kyber, we are building what we call a on-chain liquidity endpoint. So what that means is that we are going to bring a lot of and allow people to bring a lot of liquidity on-chain to the blockchain, and to create one single endpoint so that other people can integrate with Kyber and to power a lot of different use cases, including decentralized changes. In-wallet token swap, a lot of popular cryptocurrency wallets have integrated with Kyber, including Monitor Wallet, Coinbase, Trust Wallet, and many more. And interestingly, we can also work with a lot of on-chain DeFi application to allow on-chain asset management, for example, or even people can lend on Aave, and if the collateral got liquidated, they can do the liquidation on Kyber as well. And I think we are confident to say that at the moment we have the largest ecosystem of integration and partners that have integrated and utilized Kyber.
Perfect. And finally, Kevin. You there, Kevin? Maybe we've lost Kevin. Okay, so to get the ball rolling, we've seen some explosive growth within the DeFi sector this year, both in terms of on-chain metrics, in terms of investment that's been flooding in, and interest from both traders and investors and actual users of these products and services. And Loy, I wonder if you could just tell us a little about some of the achievements that Kyber has managed over the last 3 months, and some of the milestones that you've managed to reach there.
Yeah, I mean, I think in the last few months we have been focusing a lot on the growth of the network, including the number of active users, the trade volume, the number of apps that we can integrate. I think this last month we celebrated the first 1 billion trading volume of the entire network since we launched. I mean, it seems small compared to the numbers on centralized platforms, but I think in this centralized world, I think it's a major achievement for us and also for the DeFi space. And I think on the month-to-month basis, we see at least 10 to 15% of growth in terms of number of addresses that connect and do the trade on Kyber. And we're trying to continue the growth in the coming months. And I think this end of this month or early next month, we are going to do one of the most important upgrade in 2020 for Kyber. That is the Catalyst upgrade. And in this one, we are going to introduce what we call a Kyber DAO, or the first decentralized governance for Kyber. And with this upgrade, the currency token holders, they can basically contribute to the growth of the protocol, to the development of the protocol. They can vote on major decision of the network and be part of the driving forces for Kyber.
Cool. I'm glad you brought up DAOs, because that's something we're going to return to shortly. Perhaps first, Danny, could you just bring us up to speed on some of the recent developments for, is it Aave or Aave?
Yeah, it's called Aave. So basically, it's short of ghost. I mean, it means ghost in Finnish, because we originally were founded from Finland, but now we're in the UK, London, and Switzerland. Okay,
so if you just quickly bring us up to speed on some of the developments with Aave and within the borrowing sector in DeFi just now in general.
Yeah, definitely. I mean, we have been live for 6 months now, but before that, of course, we were building basically the first lending protocol on Ethereum and in kind of like blockchain-based lending protocol called ETHLend. So basically, after the rebranding and the protocol launch, I think the biggest achievements is definitely the protocol market size that has been pretty big. So as I mentioned, it's 100 million at this particular moment, and that growth is all from the last 6 months. So as Aave is basically a money market protocol, it means that we can create multiple markets. So we started with one market and in total of 16 different assets. And the idea is that basically we can create additional markets where we can use as a collateral some other assets that are maybe different than they are in terms of the main pool, for example, market size, liquidity, or they have some sort of like a derivative aspect. And of the recent developments, we basically launched a Uniswap money market, which basically means that if you are providing liquidity into the Uniswap protocol, when you are depositing liquidity, let's say, for example, ETH DAI, you get a Uniswap token that represents your liquidity share. And what you can actually do, you can use that liquidity share in Aave, deposit, earn interest, and use it as collateral to basically borrow stable coins, for example. So if you want to add additional strategies or just unlock some liquidity. And in the future now, what we're focusing on adding new markets. So basically, the next market we're launching is a token set market. So where you can, if you have a position in token sets, you can basically use that position as a collateral in Aave and leverage up. So that's like basically what we have been doing for the past months. And of course, what's very interesting coming up is that we are publishing our kind of like a governance proposal called Aavenomics on how the LEND token is going to be used to secure the protocol and reward the liquidity providers. So that's kind of like the recent stuff. And it's interesting actually that Loy mentioned about the progress, because we have been using Kyber pretty much for past couple of years or so. So kind of like if there is a liquidation event on Aave, or for example, there is a token burning scenario, it goes basically pretty much to Kyber. So it shows kind of like very well the compatibility between a lending protocol and basically a market making protocol. So that's kind of like pretty interesting.
So you've had a busy year then.
Yeah, very busy. I think in DeFi in general, it's 24/7. So everything, like there's so many things every day, something new happens, and I think it will be this way for quite a while. But it's pretty fun. I think like me and Loy, we have been very early and seen a lot of kinds of things, and I think it's just like nothing kind of like can be boring for us. I mean, there's so many things being built on top of the Ethereum protocol. It's just amazing.
Yeah, I mean, there's so much happening in DeFi just now. They're trying to cover it. You know, from my perspective as a journalist, it's almost like an entire industry in its own right. You know, so trying to stay abreast of what's happening in Bitcoin, Monero, Darknet, basically the rest of crypto. You know.
Yeah.
could do that, trying to keep up with all the new protocols and integration and liquidity providers out there are being introduced to decentralized finance. There's a lot to keep track of. Now, Kevin, I think you're with us now.
Yes. Can you guys hear me?
If you could, yeah. Could you just tell us a little bit about Ava Labs?
Sure. Of course, yeah. I mean, so we're not an application; we're a platform provider. We have been sort of heads down, mostly in stealth mode, except for the past few months, building our infrastructure. Very simply speaking, we're a smart contract platform. We actually support Ethereum in its entirety. We're EVM compatible. And we're trying to really go after financial applications that require very, fast on-chain performance, which is really most financial applications. Ultimately, I mean, what's really interesting about DeFi, it's not the decentralized aspect of it. I don't think ultimately anybody cares about that. What I think people care about is the permissionlessness of it. The ability to just take anything, anything that's capital, that represents some sort of capital, some sort of money, program it, and then move it in any way that we want and compose all kinds of things that we may want to create. And Ethereum is obviously de facto place by which a lot is being built right now. But just the other day, I was trying to, for example, buy a little bit of the comp token, and just moving some from my Coinbase to my wallet, then from the wallet buying in from Uniswap, it was a total of about 28 minutes. That's just insane. That should not happen. So we should be able to have, if you want to have permissionless protocols, ultimately you don't want to be the one party responsible for it. So obviously centralized providers are a no-go in a lot of ways for truly building the future of these financial instruments. But as currently the platforms that currently exist, as they stand, they're expensive, they're slow, and so on. So with Ava, we're building effectively that same tooling, but at effectively sub-second finality. So fully permissionless, yet and fully decentralized, yet very incredibly fast. So that's the very simple answer.
Cool. And I noticed you mentioned Compound there, Kevin, and we're not going to go into the price speculation side of things just now. But one thing that is interesting about the Compound model and the comp tokens, of course, it's governance related. And Loy, you were speaking there about Kyber introducing a DAO, and we're seeing similar projects. I think Nexus is another one that's obviously got quite a novel DAO structure in place, which enables members to vote on, in this case, insurance payouts, essentially, isn't it? So, could you maybe just go through some of the benefits of decentralized of DeFi projects transitioning to DAO models, and some of the features and benefits this can introduce?
I think the main benefit is that we can have a much we can have the entire community to really be part of the development of the project, right? And this really incentivize and give everyone the incentive to be more active in engaging with the core team, and it also gives them a channel to really raise their voice, right, and contribute their idea. And people now can discuss everything openly, and they can even talk to others so that people can vote for their idea or for their proposal. And if they can really have enough supporter, their idea will be implemented in the protocol. And I think that's the best way to really decentralize the entire project. And of course, we are not at that goal yet, but I think we are many steps closer to that.
Yeah, I think it's fair to say that DAO's probably got off to a bad start if we're going to go back to 2017. But in the current era we're seeing with this current boom in decentralized finance projects, they're being built a little bit smarter, and both sort of from a political perspective and also at the actual protocol level as well. So that hopefully we're not going to see some of the issues that beset some of these early experimental projects. And talking about security in the context of the future of decentralized finance, Stanley, what are your thoughts on how decentralized finance is going to overcome the risk of major bugs and security holes? Because when you've got billions of dollars locked into these protocols now, and there's a lot at stake, and obviously they get more complicated as you're bolting more systems on. What are your thoughts there?
Yeah, it's a good question, because I mean, end of the day, basically, we DeFi protocols, we have limited time to develop protocols, and auditors limited time to check them, and then you have attackers who have unlimited time to basically find vulnerabilities. What is interesting is that like if a DeFi protocol is launching today, there is a lot of due diligence that needs to be taken in place. And I think the threshold of launching something big on DeFi is growing all the time because of this, the security risk. So basically, that means multiple audits, and also the manual audits themselves isn't a guarantee. It's basically just additional due diligence. But there's also needs to be some automation, so basically mathematical verification, fuzzing, and more testing. So when you are creating mission critical software like we do in DeFi that holds a lot of value, it's evident that a lot of diligence has to be in place. And of course, one of the cool things that there is that basically there's different kinds of insurance projects that are, for example, like Nexus Mutual, where you can actually insure your deposit against a smart contract risk. And also we at Aave. So one of the things that we're now doing, as I mentioned, is basically the kind of like upgrade into the Lend token to use it as a way to secure the protocol by staking it into the protocol in case of a similar event, which happened in Black Thursday with the MakerDAO system. So and basically governance then deciding on whether there was a such event and how to handle that. So that's like the key thing, I think. So diligence is important, and before anyone can before anyone is launching anything on DeFi, like has to be very careful. And of course, like one of the things is that users just needs to be educated. But I think it's not a matter of like whether something gets hacked or there's vulnerabilities. It's just like when it happens, because like it's obvious there just needs to be more insurance and that we ensure that people do not lose funds.
Do you think there's a risk that we'll see, a major hack? I mean, if we're talking a couple of $1 million here and there, it's not fatal. If you take a bigger system, something like Maker, which I think, according to DeFi Pulse, is maybe something like I think it was as high as 65% of the market was basically based off of Maker at one point. Does that not create a huge systemic risk there?
Yeah, and the systemic risk is growing. Like I think in terms of risk, like we're looking in the wrong places a bit these days, because like we do, for example, have our own risk management facility at Aave, and we have a public risk framework on how we handle risk. But one of the things that we're trying to now focus more is kind of like look at the derivative risk, because, for example, when we have, for example, a stablecoin like DAI in our system, we are at the same time reliant upon, for example, Maker. And when Maker has a collateral of WBTC, we're relying upon that, and basically that circle. And if they have a collateral USDC, as they have, we're relying at the same time the custodial risk on the Coinbase and the USDC folks. So that's kind of like the compatibility is pretty cool, but it definitely brings derivative risk aspects that we need to put more focus. And I think a lot of projects are doing like very good work on the security, and it just there isn't like one particular thing that you do. Like audits doesn't help you. Like you have to do just multiple things and find a structure that works for you. I think that's the way to go forward.
Yeah, I think one nice thing about DeFi is that everything is open and public, right? And it's basically inviting everyone to attack your system. So that's why I think that test of time is the best security proof. like if you put like a few million $US in your protocol and it's safe for after maybe a couple of years, I think you have a high confidence that there's unlikely a potential bug or a hack in the coming years, right? So because you basically like open a few million $US for people to take, and none has been able to. I think that's a solid proof.
Okay, and if you kind of flip this and move away from thinking about what could go wrong with DeFi, and think about what could go right, what do you think what are the factors, the macro events and the events within the actual DeFi ecosystem that have the potential to bring in the next 1 million users, the next 5 million users? In fact, Kevin, do you have any thoughts on what events we could see that might really mainstream the DeFi sector?
Yeah, so I would probably say, before I answer that, I want to say a few thoughts on the risks here. I think what we're building is, I want to say I'm building infrastructure mostly, although I do have background in finance. I think the other panelists here are definitely the builders here of the DeFi ecosystem. I can't take that title, but what I think that there's a huge risk in DeFi is not even in the security of the smart contracts, but in what the hell is going on, because people don't understand any of these technologies. And once a lot of new users start using this, they will get liquidated left and right. They will lose their money left and right, and we've seen this happen. And this is like Robinhood on steroids. And Robinhood is already a massive place for lots of young 20s kids going there, putting their money, doing options trading, not knowing what they're doing, except that there is absolutely no accountability whatsoever. And in fact, it can grow, there's a whole bunch of other things on top that are very complicated. People don't understand. And so this is a huge risk. But it's just something that we need to deal with all in all. What can go right? I think the ability to streamline capital through standardized APIs is an incredibly important work that can happen out of all of this. We're developing on the same platform, and that's really amazing, because currently, capital is sort of siloed. It's in its own databases with its own standards. There's all different kinds of applications being built around equities and all kinds of different securities. And they're not really unified in one standard. And if finance gets programmed through one platform, what that will do is create a standard, a unified standard, which will be able to see all kinds of new interesting financial instruments being built that weren't quite really possible before. I'm not sure we're there yet, but it's possible in a future where really some platform starts absorbing a whole lot of the all the capital that's currently being traded in some particular very isolated markets because of higher liquidity and higher yields. Ultimately, this is a platform for not really banking as much as it is for trading right now, at least. And once DeFi becomes large enough with large liquidity, it will sort of have it will reach escape velocity such that more liquidity will come in. Mainstream applications, mainstream capital will come in, start trading directly on the platform, and then grow from there. But I don't think we've reached that escape velocity. In fact, I think DeFi has kind of, as far as I know, data-wise, the total amount of ETH has actually been steadily declining, locked in, which is not a great sign. But I think there's still a huge opportunity here. In part, that has been because of systemic risks happening with a lot of these smart contracts, with the complexity of using a lot of this tooling, the yields not being great, and so on. So DeFi is, in general, an amazing idea. It's the idea of the century, I think. But currently, the way it's done, it's far from being sort of showtime ready.
Okay, you speak about yield there a bit, Kevin, and perhaps I can bring in Stani and Loy here again. We see, obviously, people are locking up their assets to seek yield in various platforms and protocols, and obviously there's a lot of healthy competition right now. So people can essentially shop around for the best deal, just as you would with seeking to take out a conventional loan or something. do you think we're going to see, what trends do you think we're going to see here? So we're going to see more sort of aggregator sites that will, help you find the best yield, or even, that will auto switch so that you can, get the most interest on your holdings. What do you think we're going to see in this respect, Stanley, first?
Yeah, definitely. I think what's interesting about DeFi space, and like there's so many things, like of course, like the non-custodial aspect, but it's that basically everything is pretty much interoperable by default. So all the protocols are basically communicating the same language. So that's completely different than, for example, in the current banking world, where if you're creating an app or anything like that, you basically have to connect different APIs and work with different technologies. So what's interesting here is that actually currently the rebalancing, for example, rates from one protocol to another one, it pretty much happens manually. There is some bots and services that help you to rebalance your earnings from one place to another, and basically have this kind of like yield hacking, where you might, for example, you might deposit into one place, such as like Curve, and basically then you will get trading fees for swapping collaterals, and then that liquidity goes into actually the sitting liquidity goes to Aave. So that means that the Curve liquidity providers are utilizing the Aave lending rate and then the Curve swapping rate and hacking more yield for themselves. And I think at some point, maybe I think a year or two from now, like more and more things will be automated. So that means that this kind of like a swapping happens automatically. And this is where like the flash loans are pretty interesting, because you could easily swap from protocol to another. You could swap your collateral. You could, as a borrower, you could swap your interest rate from one protocol to another, or even currency. So let's say you are borrowing USDC, for example, from Compound or any other currency, and you see something in a lower interest as a borrower, let's say Aave or some other lending protocol, you could take a flash loan. And what you could do is actually you can take a flash loan from Aave, for example, USDC, close that USDC loan on Compound, take your Ether and basically put it into Aave and borrow, for example, let's say DAI, because it might be cheaper than USDC. And basically you take that DAI, take it to Kyber, and you swap it to back to USDC and return the flash loan. And you could even add this in this scenario also, that you swap your collateral, if it's, for example, ETH to something else, for example, Link, Lend, KNC. I mean, you could choose it. So like you could do a lot of things like automatized, and you even don't need like that much capital because of the ability to take flash loans. So I think we're not there yet where everything's automatized, but I think at some point near future that will happen, and that will be kind of interesting to see, like whether the rates will get arbitraged or what will happen end of the day.
And Lloyd, do you think DeFi is going to get easier for mainstream users to access as well? Because obviously, you're using a lot of technical terms there, Stanley, to someone who's not, completely immersed in this sector. How are we going to kind of sell this vision to people who don't know what a CDP is?
Yeah, I think in order to get mainstream, right, I really think like, all the aggregation or the smart account or, user dashboard that really like abstract away all the technical terms, all the complication of, sending the transaction and things like that from the end users. And I think we're in a much better position than say, a year ago, right? And we are seeing a lot of like, platforms that allow the users to basically arbitrage the yield, arbitrage the rates on different, dexes, for example, right? And I think just like a couple of days ago, Instadap, they announced their, Com Max, features. So basically, you can collateralize some asset and then borrow some other asset and keep doing it, right? To really like generate more tokens from the Com reward. And basically you just do it by one single click, right? And that's really cool because like a lot of things happen under the hood, but as a users, you are not aware of. You just need to be sure what does this function do, and whether the smart contract has been audited, and whether it's safe to do so. I think that's pretty much it to really get DeFi into mainstream, right? Make it easy and simple for them, and make it safe for them as well.
Just to add definitely what Loy said, what's interesting actually, in terms of, for example, Aave, when you deposit, let's say DAI, you get in return a DAI. And that's an interesting thing because the way we did the kind of this interest-bearing token is that the a DAI balance will increase in your address automatically to correspond what you deposited and how much you're earning. So basically 1 DAI will be 1 AUSD and increasing balance. So basically just by buying a DAI from Kyber, for example, gives you complete access to a interest-bearing savings account. And that could be very interesting because that means that you have a currency that basically is inflation resistant against dollar and has automated treasury management. And that's basically easy UX, and also that's accessibility, access to finance or just access to finance in regions where, for example, there is not good. I mean, there's local inflation or some kind of bank restrictions. What we are seeing now, for example, in Lebanon, Venezuela, and so forth. So that's one interesting thing. And another example is a hackathon project in the Hack Money called DeFi 777. So basically, what they did is they kind of took inspiration back in the days from the ICO period, where you basically just send Ether to an address and you get tokens in return as a basically participation in the token distribution. So what they did basically, they took ENS names and created automated ways to create deposit functions, liquidity providing functions. For example, there is one ENS name that you just put into your address bar where you're sending, and basically there's a function behind it. It might be depositing into lending, or it might be just providing liquidity or swapping. Or I don't know what it could be, even like farming comp. So there's cool things you could do in terms of UX that could actually really help to get more people into the space.
Guys, this was a wonderful panel. Really enjoyed it. I can see how far we have gone with the cryptocurrency space. And I think it's very clear that DeFi has cut a nice path for itself leading into the future. Listen, Lou, Kevin, Stanny, and Kai, thank you very much for your participation at BlockDown 2.0. We appreciate you being with us.
Thank you.